Well, hello and a very warm welcome to Daily Dispatch, a show that gives you all the latest news and updates from the digital ecosystem. I'm Priya Sheth. Thank you so much for logging in on a Friday evening. Time now to get you all the top news stories that we've been tracking today. Well, battling concerns around its privacy policy update, WhatsApp will now display a banner on the app providing users with more information on privacy policy and terms of use updates. Now, the contentious policy, whose rollout date was pushed to May 15th from February 8th, however, remains unchanged. Well, moving on to the second headline of the day, amid the pandemic, video conference app Zoom saw a 70x growth in user base in India. Now, terming 2020 as a crazy year, Zoom chief executive Eric Yuan said that the platform saw a robust growth in adoption in an extremely crowded marketplace. Now, Lilac Insights, a genetic diagnostic laboratory, has raised 50 crore rupees from various investors for expansion activities. The company, which offers specialized diagnostic services for prenatal, newborn, and oncology or cancer disorders, is now planning to get into counseling for mental health and genetic problems. Well, moving on to the final headline of the day, Open, a neo-banking platform for SMEs, has acquired OptoBiz, a goods and services tax and financial automation startup, for $5 million. Open caters to over 10 lakh SMEs and processes transactions worth $24 billion annually. The acquisition will add 8 lakh SMEs to its user base.
Well, moving on to our second segment, I have with me Mr. Mohan Kumar, who is the managing partner at Avataar Ventures. Many thanks for joining us today on the Daily Dispatch. Now, Avataar Ventures has been in news for its $100 million top-up fund that you've just announced. Talk to us about the fund and what has been the intent behind raising this additional top-up.
Hi, Priya. Good meeting you. I think we raised money about 18 months back. Our first fund is about a $300 million fund, pretty much focused on SaaS, late-stage SaaS. When we looked around the market, look, I have been in the industry for about 10 years, before that with Norvis Venture Partners. There has been a lot of early-stage funds, quite a bit of early-stage funds. And there are late-stage funds like private equity funds focused on non-tech, like consumer. But when I looked around the space, there were not many Indian funds, Indian origin funds, which were purely focusing on B2B and SaaS, like Series C and beyond. So that's the thesis, right? The market was ready for such a fund. A lot of companies early stage companies being funded, they all attained like 5 to 10 million of revenue. So there was a need for a later stage fund, and that was the genesis of Avataar One, right? And we raised the money. We put in about 8 companies over 12 months. We deployed 220 million in 1 year. And it's been a phenomenal growth phase of SaaS. And then he said, you know what, look, there are a lot more companies out there. So we went and raised a top-up fund, 100 million, to give us additional horsepower to invest in more companies.
So as I understand, this 100 million will be invested in both new and existing companies, or how will it work?
Yeah, absolutely. So roughly 50% will go into new companies, and 50% will go into the high performance company doing follow-on rounds. Roughly, right? It may be 60-40, but that's pretty much the ratio.
Talk to us about the valuations in the space, considering that there is a lot of money that's chasing startups at this point in time. So specifically with regards to the B2B space, talk to us about the kind of valuations and if these valuations are justified in this kind of environment.
You know what? That's funny. We just joke about it, right? Actually, when I went to 2018, it's a very interesting anecdote, right? I met a lot of LPs around the globe and said, you know what? India is ready for B2B. It's going to have growth state. They said, what? We heard only about B2C companies here and raising tons of money. We never heard about it. That's only less than 2 years back, okay? And they were a little skeptical about my views. But fast forward just 18 months later, right? There are 13 unicorns in SaaS. I think it has outdone the B2C mania in 2015 and 16, right? Today, the good question you ask about the valuation, I think it is overpriced. Right? So what's happening today, there is a paucity of deals in India. So let's look at it. If you want to do a late stage company, typically in US, you think about 50, 100 million plus. Right? In India, late stage is 10 million plus. Right? There's a whole lot of difference. Right? And there are about 10 plus companies, that's it. So everybody is chasing these 10 plus companies to do follow-on runs. So look what happened. They are getting, initially it was like 10 times run rate, okay? Whatever is the revenue rate, which means you take the last month's revenue and multiply by 12 and say, you know what, that's my revenue run rate and I want 10 times that. Then it moved to 50 times, okay? Now, if you look at what's happening today, it's booked revenue, okay? It's not necessarily the revenue which you are doing. You know what, I have all these customers booked. I'm going to go in the next 6 months, my revenue is going to be so and so. I want 20 times my booked revenue, okay? It is like future. So it's gone from revenue, recurring revenue 10 times to now, I think they are trading at 20 to 30 times booked revenue, right? Is that high? The answer is yes, okay? But look, if the investors are willing to put in money, the founders should be happy.
Well, absolutely. But at this point in time, you must be speaking to so many LPs, in terms of funding and what their perspective on the Indian environment is. So, what is the kind of feedback that you get from them on India and the whole investment environment here?
Yeah, you know what's fun? When I went and explained to them, look, India is a software country and it has been there for 20 years, and the next wave is actually SaaS. Look, it's an extension, okay? Software services is transforming into SaaS. The story didn't happen for whatever reasons, but now it's happening, right? So the question came about is like, how can you exit, right? What are the exits happening in India, right? How much money has people given back to the LPs, right? And that's still a weakness here, okay? For all the talk about money going into the ecosystem, the money coming back is not there. So if I look at it, if there's $1 billion we are investing every year as a country, an example, you got to return $1 billion backs every year. Okay? And if you look at US and developed markets which are well matured and developed, the money going in and the money going back to LPs are roughly the same. Okay? India, I would say, is not even 10%. Okay? The money going in and the money returning is not even 10. So you're talking a long way. So I think that is the primary concern. Okay? I don't think anybody disbelieves the story. They know that it's going to happen. The question is when. Okay? That's the top of the mind for any LP.
And of course, the big concern is also on exits, considering that, at this point in time, we had the pandemic in the last couple of months and the whole deal environment was very slow. But when we look at 2021, and I want your outlook on, what kind of exit environment can we expect going forward? Is it going to be far easier to exit companies now?
I think the exit is a function of the company's maturity and readiness, right? So if you take B2B, they have to look, if you want to list in India, it's possible. So let's look at what are the options, right, to an exit. Okay, you got list in India, list in US, M&A, and fourth is, which is getting very popular, is secondary exits, which means you sell it to another big large investor. All four are possible, right? Today, the exits have been primarily through secondary. Some other large fund buying the stake of an earlier fund, right? That's been look, that is good. It gives exit for investors who have been long in a company, but that's not that's I would say the first step, right? Listing in M&A is for every one company doing an IPO, there are like 10 companies doing M&A, which means the M&A market has to mature. Okay, large strategics buying our Indian companies, right? That is very early. Okay? You saw Walmart acquired Flipkart. Okay, there's not too many stories like that. Right? So I think that M&A, in my view, is going to pick up from end of this year, 22, 23. Between now and 25, M&A is going to pick up. Okay, that's and M&A has to be a big piece of any exit. Next is IPO. I think there are companies focusing on profitability. Those companies can list in India. High growth companies will list in US. Okay? That's going to be the trend. I would say from, let's say 10% is money giving back. I think it should go to 50% in the next 3 to 4 years, which is okay.
One last question before I let you go. I want to talk specifically about Avataar Ventures and the way forward in 2021. This is a $100 million top-up fund. How much of this are you expecting to be deployed in this year? And also, if you can talk about the second fund that you've been speaking about, at what stage is it in at this point?
So totally, we have about roughly 400 million, 300 and 400. I think it'll get deployed before the end of the year, entire money. So we will keep a little bit about 30, 40 million for follow-ons, which means Our fund is a 5-year life cycle. And so all the new investment will be done by before the year. About 30, 40 million will be left for follow-on when they raise. And our next fund, we're looking at sometime middle of next year. And it'll follow the same thing. It'll be a large, when I say late stage fund, B2B, we'll add health tech, ed tech, fit tech. But our focus will be not B2C health tech or B2C ed tech. There is a new wave of company, B2B2C, which means they sell it to a business, they sell to a college, they sell to a school, sell to a hospital, and then they acquire consumers, right? So we'll do B2B, we'll expand slightly there and B2B marketplace. So we're looking at about a 500 million fund next year, sometime middle of next year.
And you've already started roadshows and...
See, the roadshow is a continuing process, right? So the last 2 years I've been meeting LPs. I have met about 30, 40 LPs, okay? 6, 7 of them are already invested in mine, right? So we continue to engage with them, right? It's not like you go and say, you know what, I want money now, right? It takes, let's say, 3 to 6 months for a company to raise money. It takes 2 years for a fund to raise money, right? Which means you got to meet LPs, keep meeting them, keep updating them how well you do, what you do, right? And hopefully once they are convinced about it, join, right? So it's an ongoing process. So we have about 30, 40 LPs we have relationship with, and hopefully the current LPs plus another. Look, today is a 500 million fund. You need about 20 LPs, right? 15 to 20 LPs. Right? That's some maths, and yeah, hopefully you can get it done next year.
Yeah, well, we wish you all the very best, and we will be tracking this space very closely, and hopefully to interview you much before you announce the closure of that second fund. Thank you very much for being a part of Daily Dispatch. It's been a pleasure speaking with you. Thank you so much.
Well, time now to say goodbye. Many thanks for joining us on this edition of Daily Dispatch. I'll see you on Monday. Goodbye and have a safe weekend.